Welcome back to the channel. Thanks for checking out this video. This video is all about life insurance, and it's going to answer the number one question that everybody has. How much life insurance do you really need? And I'm going to answer that with 5 factors. When I talk to individuals about life insurance, I always ask them 2 questions. Question 1 is, when it comes to monthly payments, how much can you afford when it comes to life insurance? Can you afford $50 a month, $100 a month, $150 a month? That's why, especially me being a financial planner, that's why your budget is always important, because it's the foundation of your financial plan. But question number 2 is, and that's the topic for this video, how much life insurance do I really need? Do I need $1 million in coverage? Do I need $500,000 in coverage? I'm going to answer this question with 5 factors. Factor number 1 is, when it comes to life insurance, a lot of times people just want to make sure that they satisfy the basics, and the basics would be making sure that the burial and any services are taken care of. And on average, that cost is about $15,000. And so we already know when you do a basic final expenses policy, you would need at least $15,000 to cover that. And so that's factor 1. Factor 2 is, if you own a home. If you own a home, you want to make sure that asset stays in the family. You want to make sure in the event that something happens to you, that asset isn't lost because the beneficiaries weren't able to afford to live, that they're not able to afford to maintain or even keep that particular house. And so we're going to make sure a dollar amount is assigned to whatever that remaining mortgage is, whether, for example, if it's $400,000 left on that particular mortgage, we can make sure that $400,000 is set aside in that life insurance policy to pay the entire house off so you can keep it in the family, or that maybe 50% is taken into consideration, or even 25%. We just want to make sure that the family or the beneficiaries can still afford to maintain that particular household. So if they decide to sell it in the future, at least it's not a situation where they're losing the house as soon as something happens to the breadwinner of the family. That's factor 2. Factor 3 is income, especially when it comes to the primary breadwinner. If something happens to that particular person, we want to make sure that the same standard of living is still continuing once that person passes away. And so if it takes $5,000 to maintain that particular household, we want to make sure that policy has $5,000 each month, maybe for 12 months, which will be for a year. Maybe we need to do it for 2 years, 5 years, however long it takes for the beneficiaries to feel comfortable in the new normal. That's what we're going to put in this particular calculation. So if it's $5,000 for 60 months, which will be 5 years, we're going to factor that in and take that into consideration, because that's important. Because whether it's paying the mortgage, if you have children, it may be educational expenses as far as for school supplies, uniforms, things of that sort, but you still have groceries, utilities, car notes, things like that. So you want to factor in all of those expenses when it comes to the household and how the household is ran. So that's factor number 3. Factor number 4 is, if you do have children, for higher educational expenses. If your child plans on going to school in the near future and you were planning on having a lump sum or maybe taking care of all of the tuition, we want to factor that in. We can do an average on what the tuition is for various institutions, and we can calculate that and make sure that's factored into our particular process. So if it's $50,000 for 4 years, if it's $20,000 for 4 years, whatever it is, or you wanted to leave a lump sum of $20,000, $50,000, $100,000, whatever it is, we're going to put that into bucket 4, and that will be the 4th factor that we're taking into consideration. And factor number 5 would be any debts. Before I refer to whether it's student loans or whether it's car notes, other loans, personal loans, we want to make sure that those are taken care of as well. Like I said, we still want the same standard of living, but also during this process, it's going to be a grieving process. And we don't want to have the family members or the beneficiaries worried about where's money going to come from. Can I afford the house? Can I afford the car? Do I have to get rid of this asset? Do I have to get rid of this? Do I have to, change from what the new normal is? And we don't want that, especially within the transitional time period. We don't want any significant change to happen because there's already a significant change with the family member passing away. But financially, we want to make sure that we still kind of keep the engine going when it comes to having income, paying down debt, making sure that the house stays in the family, making sure that the service is being paid for. We still want to make sure that the family is still being sustained by this money or this lump sum that the insured has left for the beneficiary. So I hope that makes sense. And I hope that answers the question, because what we're going to do is we're going to take all 5 factors. We're going to add that up. Maybe that's going to be 200,000. Maybe it's going to be $2 million, whatever it is. That's going to answer that particular question. So at this particular point, we know from these 5 factors how we're going to answer that question. Now we know how much life insurance we really need when it comes to taking out a life insurance policy. So I hope that makes sense. Feel free to comment below if you have any questions. Once again, this is Larry Poteet Jr. I'm your real estate agent as well as your personal finance consultant, which includes your life insurance agent as well. And so I cover all of that in the personal finance portion of my services. Look at the comments section to get my contact information. You can schedule a consultation. I can review your life insurance policies if you have current ones. If you need a new one, we can definitely take care of that. If you want to transfer or essentially replace what you currently have to a new one, I can take care of that as well. In addition to making sure that your budget is intact, saving, investing, paying down debt, whatever you need financially, I can definitely take care of that for you, as well as real estate. So thanks again for checking out this video. Feel free to comment below. I look forward to hearing from you guys. Have a blessed day.